I finally reached a very important milestone in my dividend investing journey, which I'll share with you in a moment. What I'm trying to achieve is to generate enough passive income which will eventually surpass my full-time day job and therefore allow me to reach financial freedom. Imagine waking up one day and realizing you could actually stay in bed or do whatever you like and still earn the same amount of money as you do from your job. The difference is that now the companies you own are earning the money for you and paying you in the form of dividends. What I want to show you in this video is how easy it is to start the ball rolling. Here is every denomination of British currency from 1 penny all the way to a crisp £50 note. I have gone from earning an average of 1 penny a day in passive income to finally achieving the highest denomination of £50 a day. If you are a dividend investor, then you will probably be somewhere on this line. We are simply at different stages on the long journey. You see, I don't really worry about the ups and downs of the stock market or even the actual value of my portfolio. All I do is add spare money in each month and buy shares in companies which pay reliable dividends, which I reinvest and put the new money to work, which pays even more dividends. Let compound interest do all the heavy lifting for you. I'm not going to sit here showing you spreadsheets or exponential graphs of what you can achieve if you do X, Y, or Z. I'm simply going to show you what I've actually achieved through sticking to a simple plan and keeping myself motivated by setting small targets along the way. This is not investment advice, and I'm simply showing you my own journey. I first want to explain that I have a very ordinary job in the education sector, but I live fairly frugally, and I made sure I paid off all my debts and built up an emergency fund before I started investing. I began my journey in the January of 2009 when I invested first in the 3 banks Barclays, Lloyds and RBS. The platform I used was Barclays Stockbrokers, which is now called Barclays Smart Investor. It didn't allow me to buy individual shares in overseas companies, and ETFs were not mainstream, so I grew accustomed to buying shares in individual UK companies. In fact, I'd never even heard of ETFs until several years later. By February 2009, I technically reached an average of 1 penny a day in dividend income. It's really not a difficult target to achieve. If you buy shares in a popular company like Unilever, which has a dividend yield of 3.7% at the time of this video, you would need to invest around £100 to receive an average of 1 penny a day in dividends. I soon added another company, Aviva, to my portfolio. A couple of weeks later, I had reached an average of 2p a day in dividends. Instead of buying individual shares, a FTSE 100 ETF currently pays a 4% dividend yield. When your portfolio grows to around £183, you would be on an average passive income of 2p a day. A couple of pennies a day does not sound much, but I was enjoying seeing the amount rise. It also had a strange effect on my spending habits. I realised that if I spent less on unnecessary stuff, I could reinvest more each month, and the daily dividends would increase at a faster rate. You see, once you start measuring things, you can then work on improving them. In March 2009, just 2 months after starting, I had left a copper era behind me, and I was now venturing into a new age of silver coins. With the example of the FTSE 100, you would have to grow your portfolio to £456 to achieve an average of 5p a day in dividend income. The next milestone was 10p a day in passive income, and this was achieved in May of 2009. It felt like I was getting somewhere at last. I wondered maybe one day if I kept going I could achieve £1 a day. At the time it seemed a lifetime away, but with the power of compounding about to kick in, it really wasn't that far away at all. In our example, when your portfolio grows to £912, you would typically be making 10p a day in dividends. But don't spend that 10p, put it straight back to work so we can reach the next level faster. My next target of 20p a day in passive income was achieved towards the end of 2009. I had reached my targets of 1, 2, 5, 10 and now 20p, all within the first year of investing, by doing nothing more than spending less than I earned and investing the rest in large UK companies. Into my second year of investing now, and in 2010 I added 2 mining companies to the portfolio. In May of 2010 I reached a dizzy heights of 50p a day. To achieve this, your portfolio would have to grow to £4,562, assuming a 4% yield. You would then be on an average of 50p a day passive income. As time went by, I was not only putting spare money in each month from my wages, but this 50p a day of dividends was going in as well. My portfolio appeared to be feeding on itself. Oh, the power of compounding is a wonderful thing. Finally, in November of 2010, I reached a milestone of a whole £1 a day in dividend income. This was a powerful moment, and I wondered at the time if it was possible to feed myself with just £1 a day. Probably an impossible task, but I was starting to think about what this daily income could actually do. It was from this point that I knew I wanted to continue the journey for as long as I could, just to see what the power of compounding could achieve. £1 a day really was the point of no return. To achieve the sum of £1 a day, your portfolio would need to grow to £9,125, assuming a 4% dividend yield. If you want to start your own dividend journey and also receive a free share of up to £100, then why not consider signing up to the really cost-effective platform Trading 212? Just click on the link in the video description. Now on to 2011 with the addition of National Grid, BP, AstraZeneca and the house builder Persimmon. I now had a small army of companies working for me, and each one generating even more dividends. In May of 2011 I had reached £2 a day in dividends. Wow, this was really exciting, and I hope you can see that I just didn't care about the stock market ups or downs, or the value of my portfolio. I just concentrated on reaching my next small target. In 2012 I added Vodafone, Shell, GSK and Tesco to the dividend paying team. My average daily dividend amount had surpassed the coin denominations and was now entering the scary world of notes. In May of that year I had reached an average of £5 a day in passive income. Even if I gave up work and lived in a tent, that £5 a day would keep trickling in. Assuming a 4% yield, £5 a day would be generated when your portfolio grows to around 45k. But why stop there? In 2013 I added BAE Systems, United Utilities, SSE and Centrica. I tried to look for large established companies which had economic moats and which just plod along churning out reliable streams of dividends. If it's a choice between new and exciting or old, dull and boring, I'll choose old, dull and boring every day of the week. Compounding seemed to be really kicking in now, and in August of 2013 I reached the next milestone of £10 in passive income per day for doing absolutely nothing, and as I used a stocks and shares ISA, it was all tax free. If you are enjoying this content so far, then please give that like button a quick tap, as it really helps out the channel, and why not subscribe to follow the journey. In 2014 I added Imperial Brands, British American Tobacco, Sainsbury's and Unilever to the portfolio. At the end of 2014 I was generating an average of £15 a day. In 2015 I added HSBC. I also started buying premium bonds at this time to act as an emergency fund, so I would hopefully never have to sell my shares and could allow them to compound and grow without being disturbed. At the end of 2015 I was generating an average of £18 a day in passive income. 2016 saw the addition of the miner Rio Tinto, the pub chain Marsdens and Royal Mail, with compounding working its magic as well as me continuing to put spare money in each month. I reached the next target in July 2016 of an amazing £20 a day. In 2017 I added Greencoat UK Wind and the Renewables Infrastructure Group. At the end of the year I was generating £29 per day. In 2018 I didn't add a single new company, I just added to the ones I had, and I also continued to build up my premium bonds. At the end of the year the portfolio was generating £32 per day. 2019 saw the purchase of the drinks maker Diageo and Bluefield Solar. another renewable energy company. I also started buying exchange-traded funds around this time, such as ISF, which tracks the FTSE 100. I was now up to £34 a day. In 2020, I added the S&P 500 ETF. The pandemic affected company payouts quite badly. For the first time, my average daily dividends started to fall. We dropped to an average of £28 per day. 2021 saw the purchase of Tate & Lyle. Average daily dividends were bouncing back strongly and finished the year on an average of £35 a day. 2022 saw the purchase of IG Group, Croda and the Vanguard Exchange Traded Fund VHYL, which pays dividends from around the world. Passive income was now at £40 a day. In 2023, I acquired Haleon when GSK spun it off as a separate company. Now remember those premium bonds I talked about earlier on? Well, in the 12 months from February 2023 to January 2024, my share dividends came to £15,175 and my premium bond prizes came to £3,175, making a total passive income of £18,350, which works out at £50.27 per day. So at the end of January 2024, I finally reached a 12-month average tax-free passive income of £50 a day. Now, as I stated earlier, I don't pay much attention to the total value of the portfolio, but if you want a full breakdown on how it's performed, you can see my latest portfolio update here.